Hello, current subscribers, new watchers, fellow traders, traders to be. Welcome to Optional Enterprises Watchlist for March 2nd, 2020. And the market's been crazy the last week. Had about a 13% correction. We are officially calling this a correction. And for all you option buyers out there, implied volatility is through the roof. Let's look at VIX right now. We can see that we touched above that 48 level just this week. So implied volatility all over the market. It's just generally through the roof. And I had reversals triggered all over the market. Let's see if I can get the full scan to pop up for you in the bottom left hand corner there. There it is. I want you to look at all the implied volatility percentiles. You can see that a lot of them are sitting around 100%, which means options are extremely expensive this week. If you missed last week, this may not be the week to be looking to get back in. There are trades out there via some short ETFs, volatility products, but options are generally just very expensive this week. So be cautious out there, and let's jump on in and see what we can find for our 7 picks this week. The 10-year treasuries. We are triggered for a reversal here. We are up in Sunday night futures trading, but we can see that we are bouncing off our previous high. So let's go out to the monthly chart to see that. And there it is, back here in June of 2012. We reached we reached the previous high of 135 basis points. We bounced off that high last Friday, I believe. Okay, so I'm not saying play the futures. You could be playing them right now. Right now they're up, but we do seem to be bouncing off that previous high, which would be giving us a an Eve Adam double top on the monthly chart. So let's see if we can just draw that out real quick for you. So there is our Eve, and this is potentially going to be an Adam double top. Classic. No confirmation yet, but we do have some trading that might help us confirm this. The way I think about playing this is obviously TLT, and let's bring this down to our 1-year chart. Now, of course, TLT is sitting at 100% implied volatility because it has shot through the roof like everything else. So options are extremely expensive. Want to keep that in mind. And we do not have a whole lot of trading on the put side. Well, if I can click the right. So not a lot of trading there. And we can see we've got some pretty heavy trading right there at the 156s. Right now we're sitting at around 155.90 on the actual 155.32, 155.90 on the ask. So we're just about between 70 and 10 cents below that 156 level. Above 156, we could be looking at 157.50. Above 157.50, we're looking at 159 or 160. So, however, this is triggered for a reversal. So, a reversal, obviously we lean bearish in our trade idea, but remember, we're not biased. We trade what is given to us. For longs, $155.31 needs to hold. Our target, 157. For shorts, we want to break 155.31 with a close below. First target is going to be 154.16. Second target, 153.09. Alright, that does it for TLT. Let's move on to the next one. Alright, so our next symbol is going to be the NASDAQ itself. Looking obviously triggered for reversal, which means that yes, in fact, the SPX, the NDX, the IWM, and the Dow Jones all triggered reversals. Of course they did. Almost many securities did. So I think trading the indices this week, I trade the NASDAQ because it's obviously tech weighted, and that's where a lot of the trading has been focused this past decade. So the NASDAQ, we've got a nice little bounce here off this 200 EMA, which is providing us some support. So bouncing off that 200, and we could be looking to come up and retest all these highs, otherwise known as a dead cat bounce. So how do we trade it? I'm not going to trade the futures themselves. We'll be looking in the morning at QQQ, where I heavily follow a lot of the block trades. The block trades definitely have provided some great support levels. We can see that we bounced off our support level here on 198.87, which was a block trade placed back in November of 2019. Right now we closed at about 205.80, and we had a high of the day at 207.17. Looking at our open interest, which is what we're going to be using to trade, I don't so much use the candles themselves as I do the open interest. The open interest has provided a great area. So looking at our support levels, we're looking at 206 being lower support, 205 being even stronger support. What tells me that? Well, we're looking at the open interest. We got 9,000 open interest at 206. We know that if it breaches 206, there's a high likelihood that we'll get down below 205. However, we've got a nice strong point right here above 207.50. So above 207.50, we'd be looking for a rise to 210. Gonna be a lot of chop though. Again, we're in the distribution phase. Actually, I think we could actually just say we did our few days of distribution. We are currently in the decline. So I think a lot of back and forth, but I definitely want to see it get above 207.50 for a rise up to 210. Below 206.50, and I'd be willing to ride it down to 206. Down to 206, we're looking at 205. So belongs above 207.50. Target 210. For shorts, entry below 206.50. First target is going to be 206. Second target 205. Now that could also turn into a potential long setup below 206.50 down to 205. 205 finds support, which could be possible. Let's look and see. So 202 would be a great support level, seeing that that's where a lot of block trades took place. But that's my plan for QQQ this week. Again, can't really go off the expected move because implied volatility again is through the roof, and we're looking at a $13 expected move this week, which means that QQQ theoretically could see 220 or 195, 192. Don't think we're looking at that big of a move this week. Play it safe, and that's it. Let's move on to the next one. Alright, so our next one here is ExxonMobil. Now, I know not a lot of people are looking at gas, oil companies, they're not really, they just haven't been doing well. But nevertheless, there was a reversal triggered on this one, and it's got some strong buy volume, which is a nice candle to be looking at. We're above that monthly support of 49.25, which means we're at a great entry. I'd like to see it above 51.93. First target 52.78, second target 54.50. Got some great action over here that definitely supports the trade idea. So we're looking at some really strong support here at 50. You can see that in the open interest. These are the March 20th, so these are 20 days or 19 days out still. So want to be quick with our profits. Got some great action over here on the 50 calls, providing us again a lower support level. If it gets below that 50, then these could be sellers and obviously looking to collect some premium. I do not think that is the case with Exxon. It's taken quite the beating recently, and the reversal I think is set up for the upside. So back to the chart. The longs above 51.93, target 52.78, second target 54.50. For shorts, stay below 51.93, target 49.25. Again, the expected move is much bigger this week. For that, we're looking at about a $4.73. We're looking at about a $4.73 move for the week. $4.73 to the upside again would bring us to around 56, and to the downside, well, that would be would that be about 47? So that's it for Exxon. Let's move on to the next. Alright, so our next symbol here is XLE, falling down to its monthly support. Let's bring it out to the monthly chart so you can check that out for yourself. So we see we've got some monthly support here at 43.62, which is where it fell down to, bounced off of it. Back down to the yearly chart, and there it is. Bounce off of 43.62. We're looking for an entry above 45.29. Again, some great indicators that are definitely showing us that this is a great potential setup. Big trade there, 46.21. Looks like some people closing out some puts. Could be possibly adding to them. Want to check that out Monday. A few other great indicators in there, but we're not going to get too much into the detail. We're just going to look at our call entry and put entry. So for calls, entry above 45.29, and our first target is going to be 46.63. Second target 47.53. Now we've got about a $4.50 expected move this week. Again, implied volatility come Monday. If the markets open green, is going to see a huge decline, which is going to affect those expected moves. So I'm not factoring in a full $4 move in my price targets this week. For shorts, we want to stay below 45.29. So if you want to get short again, I don't know if I'd get in right away on Monday. Might want to wait for it and see what happens. See if we can get a close below that 45.29 on some weak volume. But if you see the current candle, the selling pressure was definitely, well, it just fell off. So I don't think shorts are too likely, but we want to see it stay below 45.29. First target's going to be 43.62. And our second target we'll put at 42.50. Alright, so that does it for XLE. Let's move on to the next. Is the XOP ETF. Again, this is piggybacking off the XLE trade. and it looks great. It's completely beaten up, trading outside its entirety range, and we're looking again. This one's triggered for reversal, and it's also at 100% implied volatility. Figuring in a $2 move this week, I do not expect a $2 move. I expect maybe $1. Again, options very expensive. Want to see that we get that volatility crush in the morning before we decide for an entry. And we can see we got a lot of trading here at 1450. So that is essentially where we bounced off of. So I expect these are going to be put sellers, and a lot of these calls leading us to believe that maybe 1650 is possible this week. So brings down to a yearly chart. We just want to stay above the open of this candle, 1513. Above 1513, and we're looking for calls up to 1650, which is kind of where this this lower support level could be. Consider this low of this candle possible resistance, 1644. So we'll just put that in there. Below 1513 though, and we're looking back down to 1409 because that's our low. So let's get our entries and our targets. And for calls, entry above 1513, target we'll put at 1644. For shorts, we're looking for an entry below 1513, target we're going to put at our most recent low of 1409. Now options on XOP are fairly cheap, so any type of move that you've just seen here, which is about $1, it's going to give you 100%. So that's it for XOP. Let's move on. Alright, so our next symbol here is Sprint Corporation. If you played this with me last week, then you know we had an entry below 984, target 930. They were trading at 10 cents on our entry, and upon our exit, I believe they were trading at 39 cents. So we had a great return on those. See, we're bouncing off that 10 EMA right now, which is not quite a support level, but the 10 EMA is we use as support before we use the actual price itself, which is 871. So 871 is our lower support. Again, Sprint is set up for, this is not a reversal so much. The reversal has played out, but we are now looking for a continuation trade to use Sprint. Again, options on Sprint are cheap, looking at maybe getting into these 950s for maybe about 15 cents. And we could be riding this all the way up to 10, maybe 1050. That's a pretty big move for Sprint though, so 10 definitely seems more likely since that's a prior high. But for an entry into Sprint, we'd like to see it get above 930. So for longs, entry above 930, target $10. For shorts, entry below, and let me say that very clearly, below 874. Now why do I say 874? Well, 874 is that where that candle is. An entry below 874 leads us down into this lower gap level. Right now we're in what we call a support zone because this is a pretty strong candle. It's pretty good volume, so we could bounce around in here. This could just be stagnant all week and not go anywhere. However, it does have low implied volatility, which makes it a great trade as far as options are concerned. You could buy the option, hold it for a couple days. If it's not working out, you didn't lose too much. But below 874, our target's going to be, target will be 811. Alright, that does it for sprint. Let's move on to the next one. Alright, so our next symbol here is ticker symbol BUD, and this is Anheuser-Busch. Triggered for reversal to the upside, but possible continuation to the downside. We'll wait to see what the chart tells us. But pretty simply put, we're looking at a long entry because it is triggered for reversal, and the reversal most of the time turns out to be right. Entry above 58.57. Target 62.38. For shorts, we're looking for an entry below 58.57. We'd like to see it close below 58.57. So for a short, you want to wait the day out, see if it closes below it on some weak volume. Again, we've got some strong buying volume, so it doesn't seem too likely. But below 58.57, with a close below, we're going to see a first target of 57.07. Again, strong buying volume on this one. Had some great option indication that we're looking at some upside targets this week. So we'll see what happens. That's it for Bud. Let's move on to the next. Alright, and our final security is Match. MTCH, Match Group Incorporated. This one's triggered for a reversal to the upside, and we've got some great indicators that support the idea. Another great thing about this one is that the IV percentile is only 69%, so considering that the rest of the IV percentiles of the rest of the market are sitting somewhere around 90 and 100%, this is actually a good, not a good, but a better option buying stock this week anyway. So let's take this out to the monthly chart so I can show you a couple things that definitely look promising. So we can see that we've got our defined this whole trading range here. We've got our first point there, second point there. This confirms the trend. Now we either break here or we look for another move to the upside. So, and that was red on the monthly chart, so this could definitely be a pretty strong level that we're looking to break below for a short down. However, we got some strong buying on Friday, Thursday and Friday, so it brings that down to a yearly chart, and you can see that strong buying right there. So looking at MTCH, we have a good chance at a reversal to the upside, but we want to see it stay above 65.50. Above 65.50, we could be looking for 66.91. Something that's important to point out is this huge volume trade right here on these 65s. So that's a pretty strong support level, but we do have these to contend with over here. Huge open interest that is either providing support or we're looking for a brush through 65, and these are actually option sellers looking to collect some premium. So a bust through 65 and a stay below it definitely means that we could be looking to see 60 this week, but above 65, and we could be looking at a possible 70. Option volume seems to die off at 75. Got about a $8 expected move this week, so I want to keep that in mind when we look at our price targets. So looking at the chart, for calls, we want an entry above 65.50. Definitely want to use that as your stopping point, stop out. 65.50 is going to be that major area. It could come back down and support itself at 62.60, but you're going to lose a lot of money if you hold that low. So 65.50 is going to be that entry point. We want to see it stay above. First target going to be 68.81. For shorts, entry below 65.50. And when I say an entry below, we want to see it close below 65.50 on some weaker volume, but it looks like we've got some accumulation happening now after this decline. So we could be accumulating, which means well, we could see it just kind of hover at 65.50. We want to see a solid close below 65.50 for a target of 62.60. Alright, I want to thank you for watching my watch list this week. If you found anything that helped you trade, please consider liking and subscribing to the channel. I appreciate your support. Wishing you profits. This is Optional Enterprises. I'll talk to you next week.